Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. We are coming to you live from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Morning, guys.
Morning.
Hi, good morning, Prashant. Good morning, Nigel. Interesting turn of events in the last few days, right? After a relentless rally, finally the markets are coming off a bit. So the big question, I guess, is do you continue to buy the dip, something that has worked through to 2023?
I blame you, Sonia, for yesterday. You were not there in the morning, right?
I wish it worked like that, Prashant.
All right,
but I'm here now, so
today we will have some repair.
Yeah.
Okay, well, I'll just quickly tell you what you need to know, right? I mean, it's basically the first time since the rally began in the markets late March. I mean, 31st of March basically is when the market started to go up and has gone up in a vertical fashion. Yesterday was the first time on the Nifty that we closed below the 20-day moving average. First time. You had a bit of a touch points. You had 1 or 2 days of scare in between all these last 3-4 months, but never closed under it. Yesterday we did. On the Bank Nifty, we also closed below its 20-day moving average. The Bank Nifty, I mean, if you just sort of compare the two advances, April, May, June, July, Bank Nifty has been a little more kind of weaker. The advance has been a bit more weaker. So for the banks, we did see 2 or 3 closes below the 20-day, but we are back below it as of yesterday. Now, to the global, before I circle back to levels you need to watch out for, it's steep cuts. So, but, you know, remember, this is the first day that both US and Europe reacted to the rating cut, Fitch rating cut, right? Because the rating cut on Tuesday, I think it was, US markets came after post-close. So yesterday was the first day that markets reacted. Both US and Europe down sharply. The S&P down 1.3, Nasdaq down about 2.25, and you've got the Russell 2000, the small cap index, which was down 1.5%. The 10-year yield is above 4%. It's been above 4% for the last 2 days, but it's not as if it kind of blew the lights out yesterday. It was a 5 basis point advance on the 10-year. The dollar index is above 102, but it was above 102 even before the rating downgrade came through. Now, this is the thing. Data out of the US still is continuing to be extremely strong, right? Now, you get the ADP employment data. This is the private payrolls number. Look at the beat, 324 compared to 190, which was the expectation. So the labor market is still strong. Just 2 days back, we were talking about how inflation numbers are softening. Personal spending is strong, which means the consumer is resilient. You add the labor market data to it and you get a pretty heady cocktail, right? Soft landing or no landing. That's the kind of economy that you're talking about, even at this point in time. The other point is earnings, corporates in US. 80% of companies which are reporting numbers in the US are beating EPS expectations. They're seeing upgrades as well, but they're beating 80%, are beating expectations. Companies in India are not doing that. So that's the other point in time. The point I'm trying to make is that the US, the economy seems to be in a pretty good shape. I mean, there is no problem. You see headlines like a sovereign credit downgrade, etc. You start to wonder, whether things are really going south, etc. Well, they're not. It's basically a reflection of the rating agency's assessment of, how large the debt is ballooning and whether, fiscal brinksmanship, which we've seen between the Republicans and Democrats and things like that. I mean, the rating downgrade has happened. It can act as a trigger for a bit of a pullback, and perhaps that's what we are seeing out there in the US. But make no mistake, otherwise, I mean, the economy, through these data points that I'm presenting, seems to be in good shape. Let's get back to the market here in India. So this is the point. Yesterday's low becomes important. I mean, it's not very far away from where we closed, but we did see a decent bounce. 19,423 was, I think, the low. So 19,420 basically is the level. In the very sort of near term, if the low could be held, I mean, things perhaps could stabilize. It's an off chance, but that's the first number that I'd want to watch out for. The reason I'm saying yesterday's low is important also because, of course, it's a big candle, etc. But if you draw a trend line from the lows of March 2023, we got a perfect touch point yesterday at that 19,420 level, and then the market bounced. So that's point number one. If the low does not hold, and there's a chance it might not, the next support comes in between 19,200 and 19,300. There are a couple of moving averages, and there is an important retracement level as well in that zone between 19,200 and 19,300. Again, I mean, these levels are not very far away. You get 1 or 2 days like yesterday, and we are right there. So that's the other kind of zone into which the market could enter. On the upside, the 20-day moving average at 19,622 becomes a sort of a resistance. Not a resistance, but a level to take out for optimism to come back once again. I don't think optimism is completely out or anything, by the way, just to be sure. But that on the upside is a level to watch. For the Bank Nifty, I just put out one level. The July low of 44,547 becomes the level to watch. We left off almost at about 45,000, so just about 500 points away, 1.5% or so. That's the important near-term support. Let's get to that, and then we'll put out more levels that one needs to watch out for. I said this yesterday. Let this play out a little bit. I mean, the broader trend, I would still say, I mean, it's not damaged. If this is a pullback, then this is a pullback within that trend. And I put out a piece yesterday as well, which kind of explained the kind of market we've had for the bulk of the year, which is up. And when an up market meets bad news, more often than not, it kind of looks right through it. It could act as a bit of a trigger, and it could fester for a few days. But beyond that, I mean, I would, I would hold back to saying that, well, this marks the end of this up move and things like that. So let's watch this space. The GIFT Nifty is implying a 60-odd point downtick. Sonia.
Absolutely. And, I mean, the sense you get when you see the screen is that this could be the first real buying opportunity